Right, lads, I'm going to go through the club account for 2016, so we'll just get straight into it. I'm going to start with looking what we asked for. This is a 60 mark question, so it's Stretford Golf Club. It's a 60 marker, go down to the end. Accumulated fund, 25 marks. Income and expenditure, 27 marks. And then bit theory, what's a levy? What's life membership? Explain how both are treated in the accounts for 8 marks. Never forget the theory. So let's get going first of all with accumulated fund. So remember, mostly up here, going to be a bit of accumulated fund stuff in here and probably one or two notes down the bottom. So we have Clubhouse, which is an asset. We have bar stock, asset. We have equipment, asset. We have bar debtors, asset. We have life membership, which is a liability. We have bar creditors, liability. We have wages due at the beginning, that's a liability. We have levy reserve fund, that's a liability. We have subscriptions prepaid or subscriptions received in advance, that's a liability. And we have investment interest due, that is a asset, we are owed that money. Okay, so that's the first thing. Then what I'm going to look for here is the bank balance. 8,500. It's on the credit side, so that means it's going to be a liability. Okay, and then the other things we're looking for, is we scan through the question, we are going to be doing a note on investments because there was investment interest. Was there any investment interest due up the top? There's interest on 4% investments here, and we just take a look at the notes and see is there any. Yep. Note 2, there's also investment interest due at the end. So we're going to need to do a note on investment interest and find out how much the investment was. And the other thing I'm looking for is bank loan. So again, we're going to have to do a note on bank loan. Bank loan plus 15 months interest paid at 8% gives us 33,000. Okay, so there's going to be a bank loan thing, which is going to be a liability. And I'm also going to look down here for last year. So we are dealing with 2015. There's a levy for 2014 of €1,000. So that €1,000 is going to be an asset. Okay, so that's very common. And I think that's it. Okay, so we will go ahead and do the accumulated fund and I'll do the notes. So I'll put all the stuff in that is easy to put in first of all from up the top. So the assets are Clubhouse, 650,000, bar stock, actually we'll do it in order. So yeah, bar stock, 6,000. There is equipment of 24,000. There is bar debtors of 355, and then we're going to do investments. We know investment interest due because we're told that is €300, and last thing is levy due. A quick calculation, if we look at the levy due bit, I talked about it a second ago, the levy due is this here, 20 members, €50 each, that's €1,000. So levy due is €1,000. Okay, so we're going to do an investment note in a second. Liabilities, life membership, 40,000. Bar creditors is 3,000. Wages due, 1,500. Levy reserve fund is 50,000. Subs prepaid is 1,400. And then we have loan. Loan interest, and we also had the bank account, which we know was a liability, 8,500. So I'm going to go ahead now and I'm going to do the note on investments and I'm going to do the note on loan. So first of all, investments. Let's take a look at the figures that we know. So we have investment interest due at the beginning, 300. Interest on 4% investments, 2,400 was received, and then there was still here 400 due at the end. Okay, so what we're going to do, we are going to have 2 seconds. 2,400 is what we received. Received 2,400 less due at the beginning, add due at the end. So there was 300 due at the beginning, there was 400 due at the end, and that gives us 2,500. Okay, so that is our figure for, that's how much investment interest we should be getting each year when it comes to the income and expenditure. So that's going to be your income figure, 2,500. Now that 2,500 equals 4%. Therefore, the investment is 2,500 divided by 4 multiplied by 100 gives us total investment 62,500 is our investment. Actually, I'm going to put it down here. 62,500. Insert some lines. Okay, so 62,500 is going to be our asset of investment interest. Now, we have due at the end. If we were doing a balance sheet, that would go in as a current asset. So 62,500 back here, 62,500. We add up our assets and we get 744,155. Okay, now to do the liabilities, we need to work out the loan note. So let's look at the loan. We are told in the question, the bank loan plus 15 months interest at 8% is 33,000. Okay, so the bank loan plus interest is 33,000. So we need to do a bit of arithmetic here. So 8% per year is 12 months. So this is 15 months, which is a year and a quarter. So I'll just write it here. 1 year interest equals 8%. 12 months, well, I say 12 months would be easier. 12 months. Interest equals 8%. So 1 month's interest would be 8 divided by 12. You're trying to find out 15 months, which will be 8 divided by 12 multiplied by 15. And this will give us 8 divided by 12 multiplied by 15, 10% interest. So basically, the figure that we have here, the 33,000, so therefore the 33,000 equals 110%. Okay, so 33,000 equals 110% because 15 months interest equals 10%. Therefore, if we work out what 100% is, so 100% equals 33,000 divided by 110 multiplied by 100. That will give us 30,000. That 30,000 figure is our loan. And that is a liability. Sorry, I'll just delete that. That is a liability in the accumulated fund. Okay, so that's the first thing. There's your loan liability in the accumulated fund. Loan. So we'll go back to accumulated fund and we'll put in loan 30,000. Now, the interest, as you can see, 33,000 is that means there's €3,000 interest. So go back over here, €3,000 interest for 15 months. 3,000 because we're told it's 15 months. Now the loan was repaid at the end of the year, so that means 12 months were in this year. So 12 months will be in the income and expenditure, which means 3 months is accumulated fund. So 3 months accumulated fund, 12 months expenditure. So when we do the calculation there, it's fairly easy. 3,000 divided by 15 multiplied by 3. 600 is your accumulated fund figure, liability, accumulated fund, and therefore 2,400 is going to be your expenditure figure. Okay, so we'll go back and we'll put 600 into the accumulated fund. Okay, we will add up our liabilities. We get 135,000. Take away our liabilities from our assets. And there's the figure we get, which we will call accumulated fund 1st of the 1st, 2015. That's our figure that we're looking for right there. Apologies. I'll actually highlight it. That's the figure that we're looking for. Okay, so this is worth, out of your 60 marks, 25 marks. Okay, now let's go ahead and do the income and expenditure. Most of the income and expenditure is coming from the receipts and payments account, and we'll also be looking at the notes below. So generally, we know we have a subscriptions and we're going to have a bar profit. So those would be the first two I'd always look at. So bar profit and subscriptions are the normal one. So let's look at other things here. We are going to have investment interest. Okay, we're going to deal with that. Okay, I missed this one. Catering receipts. So let's look over here. Catering receipts, catering purchases. So it's going to link those two together. This is a very straightforward calculation. We brought in more than we spent, so there's going to be a catering profit. So I'm going to put in here catering profit. I'm just going to do the calculation actually here. The catering profit was 6,500 minus 4,800. Don't need to do a note, I can just do it here. So catering profit is 2,300. Okay, let's go back to the question. Entrance fees. So entrance fees, there's no other mention anywhere. So entrance fees will just go in as 10,000. Okay. Next, sponsorship, 11,400. Okay. Equipment grant of 25,000. Now that would not go into income and expenditure. That would be a balance sheet figure. So we do not put the grant in. And then competition receipts. So let's look over here again, link the two of these. We brought in 25,600. We spent 22,100. So we made a profit. So again, competition profit. Just going to do the calculation here. So the competition profit is 25,600 minus 22,100, and that works out at 3,500. One other thing we would have as an income, always look for a note on life membership. So if we look at note number 6, the club has decided that life membership is to be credited to income over a 10-year period commencing in 2015. So there's going to be a life membership. We'll do a note on that. Life membership. Okay. So I can fill in investment interest because we did that note already. 2,500 income. Okay, so I'm going to do a note on bar profit and subscriptions and life membership. So first of all, bar profit, we take all our figures which mention bar. So it's going to be sales less cost of sales, which is opening stock, purchases, less closing stock, gives you bar profit. Okay. So let's have a look here at everything relevant to the bar. I'm going to highlight these and I'm going to use a highlighter option. So bar. So I have bar debtors up here, 355. I have bar stock, 6,000. That's opening stock. I have bar creditors, 3,000. I have bar receipts, 76,300. I have bar purchases, 33,600. And down here, I have bar stock, 16,900. And I have, I should have bar debtors and creditors. Yeah, bar debtors, 500. Bar creditors, 1,300. Okay. Now I've just noticed here I missed a bit on catering stock. So there's €600 catering stock left. So I must go back to the catering note. I had put in catering profit 2,300. Oh yeah, that's right enough. That's still right enough. If we had we're doing the balance sheet, we would put the 600 of catering stock in. But no, that's grand. Okay, so there's all our bar figures. So basically, we're going to have our sales. We're going to have our sales. Take away debtors at the beginning, add debtors at the end. So let's do that. So we're going to have sales. I'm going to do the workings here. So that would be 76,300. Take away 355 plus 500, which gives me 76,445. I'd have my opening stock figure of 6,000. My purchases figure, again, I'd have to do a calculation. So 33,600, take away creditors at the beginning, add creditors at the end, and that gives me a figure of 31,830, Add those two together, 37,830. Take away the closing stock figure of 16,900. That gives you a cost of sales of 20,930. So the bar profit is 76,445 minus the cost of sales 55,515. That's your profit, and that's an income. So 55,515. Your profit. Okay. Next note for income is subscriptions. So again, I'm going to go and highlight. This time I'm going to use a different color. I'm going to use blue because there are certain things that will always be. So we have subscriptions received in advance up the top. We have subscriptions here. Then we have a note on subscriptions. We have 2 more life memberships. We have subscriptions prepaid for next year. And we have 2 levies, a levy for this year and a levy for last year. So this is how we deal with these things. So first of all, we have received. So we received 102,900. Then we had prepaid at the beginning. So up the top, we'll deal with that first. Prepaid at the beginning, 1,400. So we are going to add that. Add prepaid. I'm going to call it beginning for beginning of the year. 1,400. Then we are going to have, what do we have at the end for subscriptions? We had prepaid at the end as well. Subscriptions for 2016, €800. So that's going to be less prepaid end minus 800. Other things are going to be takeaway as well. I'll come to the life membership. So it's going to be less life membership. It's going to be less levy for 2015. And it's going to be less levy for 2014. So I'll do the levies first and then we'll look at the life membership. So 2015 levy, 50 times 500 is 25,000. 14, 50 times 20, which is 1,000. So minus 1,000 minus 25,000. Okay, the life memberships. Let's look at that. 2 more life memberships. It tells us 2 life memberships bringing life membership to 10, which means we must have 8 at the moment. So 8, and we go up to the top. 8 equals up here 40,000. So 8 equals 40,000. So 1 equals 40,000 divided by 8, 5,000 for 1 life membership. So there are 2 life memberships here for in the subscriptions note. So take away 10,000. Okay, so let's do the sum of this. We get a note of 67,500. 67,500 income. Now, these 2 notes here, the bar profit and the subscriptions. The bar profit is worth 4 marks. The subscriptions is worth 6 marks. So each calculation, so even if you added one of these when you should have taken away, if you still write it out, you get 5 out of 6. Similarly with the bar, if you make one mistake, you could still get 3 out of 4. That's why the notes are very important. So 67,500 is our subscription. 67,500. Now, life membership. I'm going to look at the note on life membership. The club has decided life membership is to be credited over 10-year period. Okay. So this is straightforward enough. We now have life memberships. We had 8, 40,000. Add another 2, 10,000, which gives us 50,000 in life membership. Over 10 years means per year 5,000. Means if we're the balance sheet figure, our balance sheet figure would be 45,000 in the finance by section. But what I'm interested in is this 5,000, which is income every year. So the life membership, you put 5,000 of it through as income every year. 5,000. So let's add up the income. We get 157,715. Okay, let's look at the expenditure. So we're looking at the payments section. So we've dealt with bank account balance, bar purchases, we've dealt with catering purchases, we've dealt with. We do not put in equipment, but we do put in depreciation of equipment. So I'll just put that in. Depreciation. And since I know that, I'm also going to put depreciation of clubhouse. I don't forget. So depreciation of equipment, depreciation of clubhouse. Sundry expenses. Okay, yeah. We're going to put that in. I'm going to look for a note, see if there's any notes in that as well. Sundry expenses. We have, what else do we have? We have competition prizes. We have dealt with that. We have a dishonoured cheque, which is a bar debt. So this is going to go in as an expenditure. Okay, that's going to go in as an expenditure. So we'll call it bad debt. Bad debt, €80. Okay, and one other thing we'll have is loan interest, which we have worked out already. So loan interest. So if we go back to the notes, note number 2, the loan interest figure expenditure was 2,400. 2,400. Okay, depreciation of clubhouse and depreciation of equipment and sundry expenses. First one we'll do is sundry expenses. We have from our payments figure, we have 124,350. So paid 124,350. Now, let's look for, we're looking for stuff like wages or ESB or something like that. So I remember up the top of the question, we had wages due of €1,500 up here. So I'm going to take that away. So less wages due beginning. And that gives us a figure of 122,850. That's an expenditure. So 122,850. Okay, depreciation. I can do a quick note on these as well. So we'll call it note 7. We'll deal with clubhouse first. Clubhouse depreciation is, let's have a look. It is, if I look at the question on depreciation, equipment owned 20%, clubhouse 2%. So 2%. So clubhouse depreciation is just 2% of 650,000. €13,000. That's going to be an expenditure. So expense 13,000. Okay, and depreciation of equipment is, so equipment is 25%. of. Now we're going to have to look, was there equipment bought and sold? So we have equipment up the top of 24,000, or any equipment bought. So we got a grant for equipment, but it doesn't actually say that we bought equipment, whereas we sold equipment worth 18,000. So let's have a look here. So 25% of 24. So the equipment grant we do put in as equipment bought. So 25,000 plus 24,000 minus the 18,000 at 25%. So 49 31. Okay, check my figures there. Equipment 24. 20%. Sorry, I made a mistake there. 20%. So let's do calculation. 25,000 plus 24,000 minus 18,000. All of that multiplied by 0.2. Okay, no, that is not right. Let's have a look again. Equipment owned on 31st of the 12th was to be depreciated at the rate of 20% of cost. I think I'm missing something. Two seconds, lads. I'm just going to grab a calculator. Equipment. Hiya, lads. I made a total error there. Silly error. Yeah, I realise what I've done there. So it's equipment, okay. So we had 25,000 at the beginning. Sorry, we had 20, where is it? At the beginning, we had 24,000 and we bought an extra 18,000. Ignore the equipment grant. So 24 plus 18. So 20% of 24,000 plus 18,000 equals, so that's 42,000 times 0.2. 8,400 is my expense figure for this. Okay, apologies about that. I had a bit of a mind blank. So 8,400. So when I add up the sum of our expenditure, 146,730. So that would be our income, take away our expenditure, gives us 10985, and we call that excess income over expenditure. And I'll just highlight that figure. That's our final figure. So this is worth 27 marks. So 25 for the accumulated fund, 27 for income and expenditure, and then we have 8 marks left for theory. The theory asked us distinguish between a levy and a life membership and explain how they are treated in accounts. So a levy for a club is a payment made by the club by its members to fund a special project such as a clubhouse extension. It must be used for the purpose which it is collected. So it is dealt with as a capital receipt on a once-off basis or for a specific number of years and is credited to a reserve fund. It's treated as a long-term liability in the balance sheet. Life membership is this where a club member pays a fee that entitles her or him to use the facilities of the club for the rest of their life. It, again, treated as a long-term liability, but also it can be written off to income over a certain amount of years, and that's what you will always see in these questions. So they're both long-term liabilities. Life membership, those written off as income over a number of years. Okay, lads, that's it. Thanks.